Welcome back, guys. Crypto for Life channel. Today, new podcast, and I would like to talk about what is trading for us in crypto industry. Let's dive in. Yes, of course, it sounds like a silly question. What is trading? So you just buy, sell. This is trading. But basically, a lot of new users don't understand the difference even between the investments and the trading. And they call them, I'm a trader. But when you ask, what is your setup or what is your risk management? I made a pool and I asked the community and I asked on CoinMarketCap, asked on a Binance feed, what is your risk, what do people risk per trade? And the main answer was liquidation. So basically the people, just a gambler, even if they got a setup, they just gamble. They just go all in at every single trade. So you have to understand, if you're a trader, you have to build a strategy, you have to build a plan, you have to make a back test, a lot of tons of hours back testing. And only after that, maybe in the live, you start step-by-step growth and improve your skills. We got a big difference between the trading and investment, because the idea of investing is that you buy some asset, you buy some coin at a cheap price and sell at a high price. You can stuck in coin like many people 2021 because the price was too high. They bought it and now they use DCA strategy, but DCA strategy is not a solution, and they just wait. So they got a solutions to cut their loss, or wait, recover at the break even, or wait when the price hit some profit targets. But trading is kind of different because you can make money in both ways. You can open short position, and if the price of some asset going down, you're gonna make money, right? But you have to build a setup, you have to build a strategy for entry, right? And the same way, if the price go up, you also make money. So basically, if you're a trader, you absolutely don't care about what a price today of Bitcoin or what a price today of DYDX or Algorand or ICP. Absolutely don't care, because you open the chart, you analyze intraday, what's going on exactly only today in this 24 hour or in 8 hour, and just open 1 or 2 trades a day, long, short, make money, close the chart, go to have a party. So you choose the asset and the contract and then sell the contract on the futures exchange. That's why you have to work with the risk management. The goal is to expect the price of the assets fall by the time the contract is executed. A short position is closed by purchasing the contract in the market before the settlement date. The profit or loss depends on the difference between the sale price and the purchase price of the contract. A short future transaction allows you to make money on a fall and a downtrend in the asset price, but you have to care about your risk management, and you have to count your proper risk management. That's why I talk about that pool, what I posted on Binance and CoinMarketCap, what risk people use per trade. So it's not a good idea to open trade with liquidation. So mostly the risk per position, it's 0.5, 1% or 2%. And next one, I would like to talk about leverages. Now, when we understand the basics, the new users always think they need some crazy amount of money to start trade, because they think I can make money only with $500. You can. But you have to build a strategy and learn how to compound your profit and work with proper risk management. One of the most frequently asked questions, it all comes down to risk management and understanding how much money you need. I try to explain as simple as possible. When you trade, you have to trade not your deposit size, you have to trade a percentage. That is, no matter what deposit we have. For us, initial deposits is like 100%. At least, for example, $100, or you can have like 100K. We don't not enter into some trades 100% per trade. It's logical, right? When you open short, you don't need to put 100K per trade, even if you get a proper risk management. No, that's why we can use the leverages. on futures. So you got a like entry point, stop loss, and the take profit. When we see a situation, so when we see the setups is like a list of factors, list of your personal reasons why you have to build a logic, why you want to open trade now. We enter a trade by setting a take profit and the stop loss. Every single time when you open trade, you should use the stop loss. Maybe you can ignore the take profit level because take profit you can close manually, or take profit you can add it later, but stop loss, it must have to be. In fact, this is a cancellation of your idea. This is a stop loss. So when you got some reasons, you build a logic, then the open trade and the price just make a reversal move and hit your stop loss. It just mean you did everything correct, but this time your logic was wrong. So this is it. It's more than okay to make a mistake. And when you get a stop loss, it doesn't mean you lose 100% of your position. No, you lose some percentage. It can be like 1%, 2%, 3%. And initial deposit was 100%. Still got 98% our deposit, the money what we can work with. And let's imagine if we got an initial deposit 100%, we can make, to lose all our money, we have to make 100 unprofitable trades in a row with 1% risk. So that's a key. Imagine 100 unprofitable trades in a row to lose everything. So don't fall in trap all this social media stuff when the people share only the successful story. You have to focus on yourself and on percentage and the end of months. So if you got 100% initial deposit, no matter what deposit it is in amount of money, it will be amazing if you will close every single month around 10% per month. Then you just compound your initial deposit, the size of deposit, what you're trading for. But anyway, what to do if there is no such deposit, like $100 or $500? You can increase trading leverage. On every single exchanges, we got a leverages. For example, you got a $500. Every single leverage is just to multiply your initial deposit. So if you use a second leverage, it means you open position with your 500 real money, but you borrow from Binance or Bybit or from any centralized exchanges. You borrow another 500 with second leverage, another $500 for trade. And now you trade 1K. If you use 10 leverage, it means you trade 5K. But your stop loss also multiplies. So if you lose 1% from 500, it can be only $5. But if you lose with 10 leverage 1%, it will be $50 from your 500. So that's a deal. But of course, if you make 1% from $500, you can make only with 1%. If the price go into your direction, correct direction, you can make $50. To summarize this video, you have to understand that trading is the same profession. And in this industry, you can be the pro. But before you become the pro, you start in practice. You need to study the theory. You need to make a lot of back testing. And only after that, you move on to the full functionality of this profession. Because all these stories about the guy made 1 million from 1K, you understand it's mostly the insider traders or just by luck, or this is the creators of their own meme tokens. But in trading, we always work with risk management. We can lose all money. We can lose a lot of money because we can't control the market, but we can control the risk. So don't create a false impression from this industry. This is a place where you need a discipline a lot more than you think. So guys, in next videos, in next educational videos, I will show you how to count the size of your position, how to add stop losses. Yes, it sounds fun, but a lot of people don't use the stop losses. They don't understand why why they have to use stop losses, what size of position should be for each stop loss, and also we'll talk about a profit because yes, in this industry, you can make a lot of money and you can lose a lot of money. Guys, I hope you like this podcast. Subscribe channel, hit the like button, hit the notification button. Don't forget to join my Telegram channel. See you next time, guys.